All right, good morning, good afternoon, good evening, ladies and gentlemen. Welcome back to another Market Open. It is nighttime for those of you in Singapore. So, for those of you watching from Singapore, welcome, welcome. Uh, right, so today we have a couple of things going on. Let me double check. Right, so we do have a couple of things going on today. We actually have oil prices going up. We also have the FOMC minutes being released, and I believe we have news around the Anthropic IPO as well as OpenAI. So we have also seen, if I'm not wrong, I saw in the pre-markets earlier, Nebius also issued some senior convertible notes, if I'm not mistaken. Nebius, so let's start with that. And I think the entire $4.5 billion of senior convertible notes. And I think that's where we want to start with as we take a look at the markets today. Nebius down nearly 10% on the news. So, I mean, in relation to Nebius, you are seeing the entire neo clouds sector down, CoreWeave down 2%. As we were saying yesterday, seems like you are getting a chance to get into this name at around $90, and you have Iran back at $40 a share. Now, thankfully for us, today, most of our names are doing actually pretty well. I might be looking to roll out my Zeta options. So they expire 4th September. If I just roll them out until 2nd of, yeah, I don't really get much premiums for them, even though I'm rolling them out. Well, I mean, we'll see. I can roll it out to 29. Even then, the delta is quite high. So what might have to happen is that we might have to just take a little bit of a haircut on the covered call options, the covered call premium on Zeta. We'll see how that goes. It's actually not too far above our break even, right? So we sold $27 covered calls at for $1.05. So our break even is actually $28.05. Right now we are $28.90, around 85 cents above the break even. So there is still 2 weeks to go. So let's see how that plays out. The two positions that are red today, ASTS and CoreWeave, really kicking myself about ASTS. Like I saw this, I was talking about it, I just forgot about it. I should have trimmed ASTS over here. I even took off my cash secured puts over here because I already could tell that it was struggling to break through the 50-day, and I didn't want to have any downside pressure, and we have to run the risk of being assigned more shares of ASTS when I want to have the liquidity going into September. But I just forgot about this position. Yeah. So right now, today, SoFi is up 2%. I think if we can close the day above the 50-day moving average, which is around 1750, and above this this line over here, I think it actually bodes quite well for SoFi. This means that we could likely, I'm not saying it's definite, see another retest of the $19 ranges. So is this a breakout? I think it's a little bit too early to tell. Let's see how this continues to develop, but initial signs are pretty encouraging. Bitmine, similarly, let's see whether or not it can stay above the 100-day moving average. That's what we want to see. Yesterday, we tried and failed. The day before, we closed above the 100-day moving average. So today might be the day we actually break past the 100-day moving average, hold there. It still won't be considered a full candle close above the 100-day moving average, but at least it's moving in the right direction. And I think I was quite surprised to see ETH at 1920 earlier. What is it now? Around 1930. And Bitcoin testing 65,000. This was the range that I said Bitcoin really needs to get past $65,000. You can see that has been a little bit of a resistance for quite some time. in the last couple of weeks. Okay, when I said quite some time, I'm talking about in the short term. And I think, if we are to get a little bit of a relief rally at least, sorry, from crypto, then I would think that Bitcoin will have to break past $65,000. But if you remember what we ended with yesterday, Sean Farrell, the head of digital asset research from Fundstrat, was actually saying that he's expecting some of the shorts unwinding to add a little bit of buying pressure for Bitcoin, but eventually that will fade away. Okay, let me just make sure my settings are right with the stream and then we can carry on. Where's my settings over here? Live, I think it's over here. It's turned. Okay. All right, so that's where we are with the first two positions in the portfolio. Account today is around 131,000. It's pretty decent, considering that CoreWeave and ASTS is down. But overall, on the day, we are up around $1,500. That is fine. So let's continue taking a look at the core positions. We have Zeta Global, spoken about that. If I, for my own selfish reasons, hope to see this retrace a little bit. So let's see. It's not super overbought at the moment. It is not super overbought at the moment. So is there a chance that this could go up even further? Maybe. I would say that I think people were asking me about trims. This first level over here, $32, that's probably where I'm looking at my first trim. Robinhood up 2%. We haven't really paid attention much to Robinhood recently, but as of a couple of days ago, last week, I think, we kind of have a bullish crossover over here. So that's good. I think if Robinhood can continue to form support on the 50% FIB. Now, you know that if you've been following this channel, the 50% FIB has been quite magnetic for Robinhood previously, in the sense that it always pulls the price action up there, and then it came down, and our covered calls were safe, and then it happened a second time, right? So this time around, thankfully, we didn't sell the covered call at $90. We sold the covered call closer to $125. So right now, this 50% FIB that was acting as resistance previously, this is now acting as a little bit of a support. So if we can find support over here with the golden cross, I believe that Robinhood can continue to at least retest the 0.382 line over here. So let me extend this out a little bit so that we can see how this performs. Oops. All right, so that's for Robinhood. Now, CoreWeave is doing pretty well to recover. Like I was saying, it is retesting, closing the gap. So for those of you who are complaining that, oh, CoreWeave has run, you have missed out on CoreWeave, this is your opportunity to buy a little bit more CoreWeave. Speaking about that, I am buying a little bit more CoreWeave in my main portfolio if I have a little bit of capital left. CoreWeave, where's CoreWeave? Because my initial purchase was at 69, so buying at 90 now would make my average purchase price. You know what? Maybe I shouldn't be buying CoreWeave. I should just be selling. Do I really want to be selling cash settled puts over here? I think it really depends. I'll wait and see. I wouldn't do anything in the first 10 minutes of the day. Let's see whether we hold a 50% FIB. If we hold a 50% FIB, then maybe I'll just end up buying around $92 because that's where I was looking for the gap to close. In fact, just yesterday we were saying that it is pretty likely that we break past the 200-day moving average and actually touch the 50-day. The question is whether or not we can hold the 50-day. And I think there is a lot of fear going around the AI sector right now because of a news report coming out from, I believe, okay, at least I saw it on the Wall Street Journal around OpenAI's revenue. I think the growth is, the word that they use is tepid. I think it's a little bit contradicting because just a couple of days ago, 29th July, so what, 2 to 3 weeks ago, we actually heard OpenAI saying that their July numbers were better than all of their Q2 numbers. So there is a improvement, and I think that improvement kind of coincides with the release of the new model. I'm not entirely sure. I think 5.6 was released around then. I can't remember when was the release. ChatGPT 5.6 release date. So 5.6 was released on 9th July. So was it because of So that caused the adoption to increase? Maybe, right? We basically have 20 days of data since the release, or 21 days of data. So I think it's a little bit hard to say whether or not this was driven by demand for their 5.6 product. But at least what we know is that July numbers are better than the whole of Q2. So we're seeing a little bit of a rebound. I'm sure So has some part to play in it, but I think I'm hoping to see also in general their entire business doing a little bit better. Okay, Nvidia down down 0.7% on the day. Good morning, Lawrence. SoFi needs to clear 19. Absolutely. We absolutely need to clear 19, but we have been trying so many times. I'm not too sure what is different this time around. I was just saying that I think SoFi today will retest this level, and we need to hold the 50% FIB at the top of this wedge. If we do, then I think next week onwards, or perhaps later this week, we can get another run at 19. But it's still too early to say. So let's see how this turns out. I mean, of course, usually at the start of the day, the first half an hour or so, markets tend to be a little bit more volatile. So right now, SoFi is only up 1.5%. We have come down a little bit from the high of days of around $18.13, right? So with that, CoreWeave is just under the 50-day moving average. I believe if CoreWeave goes down, we are dipping to 85. So like I said, not in a hurry to be buying. Looking to add today to a little bit of CoreWeave in the main portfolio, because I have a big margin of safety there. My CoreWeave position in the main portfolio is in the $69 range. So if I can get it at around 85, that would be fantastic. I think there is a lot of levels of resistance quite close to each other. You have $90 over here, and between $90 and $92, that is one level of resistance. That's between the 50-day moving average and the 200-day moving average, as well as this $85, which has held as support and resistance for quite a while now. I think this should form another layer of support for CoreWeave. With this gap closed, if they find support at this level, I think they can at the very least retest 112. Again, this is all assuming macro and everything else turns out fine, right? So that's where we are with CoreWeave. ASTS, like I said, down 4%. Kicking myself about this. I am going to be very brutal with this because we really have no support if we break past 64. Right. So if that's the case, I might yeah. If I really want to have the capital, and I'm kicking myself because I remembered to close my cash secured put when ASTS was at 74. I left my sell order as a market order, didn't execute, didn't check back on it, and then now I'm stuck with this at 64. I could have trimmed it for at $674, but I really missed that. So let's see how this goes. Right now, there's no strategy with this. This is just hope. But basically, I want this capital to be free going into September and to the midterms. I think the safest hedge that you can have is actually a little bit of cash, because if you buy puts, you're kind of putting a time on this, unless there's some sort of catalyst that you expect. But I think if you're looking at the drawdowns that happen leading into midterms, these tend to be 1 to 2 months. So I don't think that there's a huge drawdown or a huge catalyst. It's just a slow bleed. And so because of that, I am looking to just raise more cash, sell more covered calls, and basically roll the portfolio that way. So grab 348, sorry, just up around 14 cents from where I sold it. at 335, and ServiceNow is at $123. Again, yesterday we tested the top. We broke below the top of the wedge. Tried to test it, failed, but today we are getting a stronger break above that. So let's see whether or not we can finally break above the wedge and again retest those levels. I think the first level that ServiceNow needs to clear is 141, and then thereafter we could see it go up to around 178. I don't think 160. I think 178. If you even if I draw this line across, you can see it's been support over here as well. So I think 178, the 0.618 line, that is going to be quite a tough resistance to sell. So for people, if you are like me and ServiceNow is more of a short-term trade at 178 or a mean reversion trade at 178, I would be looking to at least take some off the table. All right. Let's take a look at the rest of the markets. We are having the SPY up. The SPY is up around what, 0.3% today. SPY is up around 0.3%. Nasdaq down 0.3%. I think Nasdaq is the one where, if you look at it on a daily chart, it didn't form a new all-time highs this last rally after the July lows, and with a little bit of weakness where it is right now, it is still not oversold despite dropping falling in the last 2 days. So I wouldn't be surprised to at least see another retest of the 100-day at 697. But really the line to hold is 672, the 50-day moving average over here, 50% fit. Yeah, okay. Let's see, Singapore markets was down, but at least recovered on the day. Okay, that's fine. The Kospi is down another 6%. Really you hardly see indexes so volatile. Bitcoin having trouble breaking past 65,000. I hope we actually get to see that sometime on stream today. We are at 64,978. 64,977. My goodness. We did tap 65,000 for a little bit, came down, and the problem with Bitcoin is that Bitcoin cannot hold 65,000. All right, I think it's good that we are seeing the 10-year treasury uh, fall a little bit. Now, I say fall a little bit. It is still 465, right? So, I mean, this is just doing nothing except continuing the trend. This is really doing nothing except continuing the trend. Nothing surprising over here. MRK covered calls. What strike did you have those on? What was the announcement for Merck that they ran up 11% on the day? Hmm. All right, give me a minute. Okay, so Robinhood CEO is Vlad was on CNBC earlier. Okay, they're partners with. Okay, that makes sense. Okay, so far it's back above $18. You love to see that. I just want to listen to what. Okay, so there has been a couple. Maybe we. Where is it? I am not seeing this. There was another. Give me a minute. There was another video on tokenization released yesterday. All right. This is from Anthony Scaramucci. I believe there was commentary around the Clarity Act. Let me just double confirm. Okay. Okay, I'm just going to play you a short clip over here, and then let's talk a little bit about the Clarity Act, because I think there is a lot of concern over the Clarity Act passing. Personally, yes, I do have vested interest in seeing the Clarity Act pass, but I'm not worried even if it doesn't pass. But at least let's see the latest news around the Clarity Act.
The New York Stock Exchange.
Sorry, this is not it. All right. Let's listen to this. I'll give you my thoughts at the end of this.
What Skybridge had done. So I don't see that as the overall risk, but I think you're bringing up an even bigger point. What is the catalyst? And I don't see a near-term catalyst, frankly, other than that supply-demand differential. Moreover, I don't think the Clarity Act, should it pass, and maybe it's 50-50 that it will. I mean, that was Senator Tim Scott is here with Senator Cynthia Lummis, and they still believe they can get this passed in September. That might be a tiny catalyst, but I don't see that as being a big catalyst either. So this is a grinding situation.
Well, that's interesting. Why wouldn't it be? Because this is the bill that the industry has been trying to push for to try to get some clarity for quite some time. Explain it to the audience. Why I would have thought that having this bill would be a big boon to the business.
Well, I think long term it would be a very big bill. You have to read through the bill and recognize what's going on. And basically, put simply, there'll be a lot of access opportunities for banks, and there'll be a lot of changes in the way you can hold your Bitcoin in the United States, and it would remove this sort of pendulum swing of regulation between Republican regulation and Democrat regulation. And all those things are good things. But I again, this is just my opinion. It is a contrarian opinion, by the way. You could bring another person on. They'll say, oh, no, the Clarity Act will be like a rocket ship for Bitcoin. But remember, our team is looking at it every day, and we're looking at the flows. And the good thing about Bitcoin, because it's on the blockchain, you can see all the activity. And so I'm just saying, yes, if it passes, it's great for us long term, Andrew. And obviously, I really do want to see it pass. But I'm not the perma bull where I'm just going to tell you nonsense on television. I think it will go higher over time as the supply-demand differential changes once again. But again, 37 years doing this, 9 bear markets. This is a clear Bitcoin bear market, and yet we've only had a 55% drop in Bitcoin, where in other bear markets, Andrew, you've gotten like a 75, 80% drop. So weirdly, you could take a position where that's actually a good sign that there's a lot of net buyers going into the next bull phase of Bitcoin.
Okay, I'm going to throw, I don't know if there's going to be a proverbial grenade into this conversation, but as somebody who has been an advocate for crypto for a long time, I'm curious what you made of the headline that World Liberty Financial, which of course owned by the Trump family, has been conditionally given permission to become a bank. Is that a good thing or a bad thing?
I don't really think that's that big of a grenade. I mean, that was like not even an M80. I mean, listen, if they become a bank, it's not really that big of a deal for the overall market.
Okay, I'm going to stop it right there. I don't think World Liberty Fund becoming a bank is that big news to me. Yes, politically, I think people will say that smells of foul play. I will not comment on that. I'm just concerned about the Clarity Act. And what he says over here is that he does not expect the Clarity Act to really be a rocket ship for the crypto economy. And I am in the same boat. I really do not think that that is going to be the case. I think it's good long term for the industry, but I don't think it does anything for the price action. So if people are waiting for the Clarity Act, if that's your only thesis for owning Ethereum and Bitmine, then that might be something you might have to reconsider. And in fact, I'll go one step further and say that we have already seen it in May. Bitmine actually ran up all the way into the Senate Banking Committee vote. The moment the vote passed, Clarity Act moved into the Senate. That's when you actually saw Bitmine start to fall. So don't be surprised that once we get news on the Clarity Act, once we have certainty over the votes, and then after that, what's going to happen is that we're going to see prices of Bitmine and Ethereum start to fall. All right, now I'm going to take you to the next video where we have Robinhood CEO talking a little bit more about tokenization. It's quite a long video. In fact, to be honest, first time I'm watching it as well. Let's watch it together. I will not play through the entire thing, and then we'll just skim through and see what he has to say. Because I think if you are someone invested in Bitmine, you are someone invested in Ethereum, this is really the bull case for you, the tokenization of the entire financial economy. I think this is something that will bring the level of throughput needed on Ethereum in order for the bull case to play out, in order for the price of Ethereum to rise, in order for the gas prices to rise. And then after this, we will get into the biggest story of the day, the Anthropic and OpenAI revenue, and what that means for the companies surrounding it, right? Because I think when it comes to Anthropic and OpenAI, the concern is not about these two companies. Even if these two companies go belly up, I think the American economy will do perfectly fine. But I think what stands to lose really are the other companies that are tied to them at the hip because of various contractual agreements, right? If they cannot fulfill those contractual agreements, some companies will be hit harder than others. For example, Oracle. I am staying away from that name because over 50% of their RPOs come from Robinhood. Come from OpenAI. So I am not someone who looks at just the absolute number. I think the absolute number can still be healthy, right? They can still have over $3 billion of RPOs. But if they lose half of it, which is another $3 billion, the markets will reprice the company, healthy or not. So let's continue looking at what Vlad has to say about Ethereum, and then let's move on to talking about the AI trade and the biggest news today.
On X yesterday evening about tokenization and why it is the best path to monetizing, or I say monetizing and modernizing the American financial system. Vlad Tenev joins us right now to discuss that issue, crypto regulation, prediction markets. I'm talking a little agentic trading, Trump accounts. By the way, I just signed up for my children and more. He joins us from Washington, D.C., where he's going to be attending a meeting at the White House and a separate meeting at the CFTC tomorrow. Good morning to you, Vlad. By the way, the Trump accounts app and all of that, I know you did a lot of the behind the scenes work. It's great. And it's so easy.
Way better than I would expect from any government thing that I was involved with. Could you get involved with the Treasury Department's purchase for bonds too? Like that would be really helpful.
Thanks for having me.
Yeah. By the way, just one note on the Trump accounts, just because we're talking about it. And I know a lot of families that are trying to sign up for it. Right now, you can only effectively get the S&P 500 on it. That's what it is.
Goodness, muted. And yes, just wanted to point out, I saw that 16%, and I believe Nvidia's one also. The spread is also widening after they agreed to like backstop parts of the Ohio data center.
Is that what it's going to be longer term, Vlad?
That's correct. Right now, you can get the S&P 500 through a low-cost ETF provided by State Street. And we wanted to make it as easy as possible for every American starting at birth to get access to the great American economy, to get ownership of these companies from birth and see the magic of compound interest. So we wanted to make it as simple as possible. Of course, over time, there's been discussion about more options, but I think the default of a diversified portfolio of the most prominent companies has been a great way to start, and it's been very effective.
Let's talk about tokenization, because that's something I obviously just wrote about. It's a conversation I think that's top of mind for you, but also controversial to some extent. It depends how people think about tokenization. So why don't we talk about the context with which you're describing it first?
Yeah, so tokenization, we're at the beginning of a super cycle, and it's going to take over the entire financial system. Now, a month ago, we launched Robinhood Chain outside the US, and this is our crypto blockchain. And one of the interesting things about it is it includes stock tokens as a primitive, which give tokenized exposure to US stocks. Now we start and you can move them around the blockchain like you can Bitcoin or any other crypto asset. And what they really do is give exposure to US stocks to people in over 120 countries. And I think this provides a roadmap for what the financial system can look like. Now, I think tokenization in the US has come up, and I'd say it's broken up into two camps. There's sort of two sides to it. On one side, enthusiasts that just want to get their hands on this new technology, new capability, and they're asking us, when is it coming to the US? What's that going to look like? On the other side, there's people that say, well, we already have simple access to markets here. We have products like Robinhood that provide fractional shares, 24/5 trading. Maybe it's not 24/7. So what's even the point? And so through my post, I kind of outlined the three key improvements on an infrastructure level that can actually impact people's lives in a positive way and make it easier in America for people to become investors and owners of our great economy.
How much of the tokenization effort, though, in the U.S., and obviously what you're doing currently is largely outside of the U.S. because of the regulatory scheme, is about the idea of getting, and this gets to the idea of democratizing access, private companies, and how we should think about that component part of the story?
Yeah, I mean, I think we're starting with U.S. stocks, which is an asset class that provides a great foundation of broad-based ownership, which is really what Robinhood is all about. We believe in broad-based ownership of high-quality financial assets. So stocks provides that foundation, but the infrastructure that we're putting in place to power 24/7 trading of stocks, the portability, the instant settlement, I think it's really interesting when it can be expanded to other assets where liquidity and access are even more challenging. And I think that's where you're going to start to see the advantages continue to increase for the tokenized framework rather than traditional financial services. Private companies are a main example of that, because with private companies, it's not just the access that's a problem, but also the liquidity, the market infrastructure. There's no good exchanges for private companies. And I think with tokenization, all of this can happen on the blockchain where there's already a liquid global market.
So Vlad, I get the tech part of it, or the value proposition of the tech. I think there's a philosophical question about public markets versus private markets and effectively the convergence of them, and this idea of whether private markets should be available at scale in the same way that we have public markets, just without all the same regulations and necessarily disclosures. Where do you land there?
Well, I think that we certainly have to make sure we balance innovation with investor protection. I don't think that they're in conflict. In fact, what's made American capital markets the greatest in the world has been the balance of the two: strong regulations, access, and investor protection. I do think there's a real problem to be solved here, because if you look at all of these private companies, the AI companies like SpaceX up until recently, the lion's share of that value creation, the economic value, has been created without ordinary individual investors being able to participate. And I think that's a big problem. I think that broad ownership, particularly of these innovative companies, is essential to maintaining a free, stable, and prosperous society. So we've been pushing forward through that, be it through our tokenization initiatives outside the U.S. or Robinhood Ventures within the U.S., which is attacking it from a slightly different angle, but still getting to the same.
Can you hear me? Am I muted? I think I hit something on my mic. There was a red light flashing on my mic. All right. Yep. So I was saying, right, like at least in the company that I work in, we do give people access to invest in private equities. So we do have access to companies like what was I saying? Oh, TikTok, right? But they needed to, the clients that we want to work with that wants to get exposure to these private equities need to be accredited investors. And what Vlad is saying is that, look, with how a lot of these capital market structures, how they work, a lot of the value creation happens in taking the markets public. Now, what is the ramifications of that? I think the ramifications of this is that, number one, we are also assuming that once we open up the opportunities of private equities to the mass market, we are going to see the same kind of wealth being created once the IPO comes in. That's where I kind of think that I might have to disagree somewhat, because I feel like if the mass markets, right, if the typical retail investor is able to get in the earlier rounds, then that's where the excitement will come in, because that's where the volume actually comes in. The reason why the IPO gets so oversubscribed is because all these banks, they underwrite the company at ridiculous valuations, like the SpaceX one, and then they go and sell this hype to the retail investor, and the unwitting retail investor will just end up buying into the hype. So it's that lockup, that period of being private and then suddenly becoming public, where retail investors can suddenly participate. That's what's driving that initial momentum. That's what's driving the excitement, or quote unquote value unlocked. But if you bring in the retail investor right from the start, then there's going to be less of that, right? Because I think the market forces will work out, and I think people and the markets have been good at finding fair valuations for companies. If you ask me, I think a lot of the regulations are bullshit. Okay, I'm going to say that because I think that the banks, the financial institutions themselves, the way that they are pitching and selling certain products to the customers right now, they are also pitching it and selling it in a way that assumes the customer's ignorance. So it's because the customer is ignorant, so they'll believe whatever nonsense that the banks and the financial institutions tells them. So if you tell me that all this regulation is to protect the consumer, I really, really don't think it does a good enough job to do that. And I think letting the consumer participate at the earlier rounds of some of these private equities, number one, you're giving more liquidity to some of these smaller companies. And number two, in fact, I think you are protecting the customer and the consumer even more, because you are taking out the potential of that built up excitement translating into a very what do we call it? Exuberant reaction in stock price, right? Once they become public. So I am of the opinion that tokenization is good for the financial markets, and it is good for the retail investor, because you are going to lessen the hype and the excitement when the company eventually IPOs. Because if most retail investors can get access to the company in the private markets, then you kind of like do not have the excitement anymore. I think it is that unfounded excitement over certain companies that causes people to buy SpaceX in the $200 ranges, holding the now down over 50%, right? Are they still down over 50%? I think they're still down over 50%. Yeah. So I do think that there is a time and place for that. I mean, one of the reasons why I even joined this industry is because I'm like seriously sick and tired of the number of people in this industry giving wrong and I don't know, bad advice, let's just say, to friends and family. It's ridiculous. So, like I said, I really don't think the current rules and regulations are enough to protect the consumer anyway. And I think by letting the consumer come in earlier, you are basically spreading out the effect of that hype that builds up while waiting for the IPO. Without that exuberant price action after the IPO will not be as drastic, I hope. And then because of that, less people will get burnt along the way. This whole, you need to know better and all that kind of thing. I mean, honestly, I really, you look at some of the analyst reports that come out, I really doubt the analysts know much better than the retail investor. In fact, for some companies, I think the retail investors can understand the companies much better than the analysts, because the analyst looks at it as if it's a number, as if it's some math problem to solve, but it's more than that, right? It's a business. So I hold very strong opinions about this. I think the financial regulation, not just in the US and Singapore, generally around the world right now, is very restrictive, and it's probably restrictive for a reason. Maybe I'm jaded, but yeah. So how do we solve that? Like I said, Ethereum helps to solve that in the long term. By solving that problem, we will see the amount of throughput needed to drive up the price of Ethereum. Once the price of Ethereum gets driven up, people need the price of Ethereum will end up being high or being held up through the buying pressure, because people need to hold ETH in order to transact on ETH. I mean, Vlad himself was saying earlier on, right? Our Robinhood chain is built on Ethereum. It's transacting on Ethereum right now. And as I was talking about it, I think 1 or 2 days ago, with what Lorenzo Valente from ARK Invest was detailing, the problem right now is how the fees are being separated, right? Robinhood is keeping over 90% of the fees, or nearly 90%. 10% goes to Arbitrum, and only 0.15% comes to Ethereum. But again, that is because transaction is not high enough. The moment transaction throughputs increases exponentially, so will the fees of Ethereum. And because of that, I would believe that more revenue will then be attributed to Ethereum. And I think the other organizations around the Ethereum ecosystem, Ethereum Institutional, ETH Systems, ETH Labs, they all have a role to play in getting the adoption of Ethereum, getting the financial system, getting the legacy institutions to adopt Ethereum. All right. Okay. So one of the not this. See, I already spoiled my news. Okay, one of the latest piece of news that I saw recently, and I also heard some of the other YouTubers talk about it, is OpenAI's second quarter sales show tepid growth. Now, this was actually released, or this article was updated today. But actually, when I went to do a little bit of digging, I realized that OpenAI CFO Sarah Fryer tells employees that annualized revenue in July topped all of Q2. So these two, to me, are contradicting reports, right? On one hand, you actually have OpenAI showing slower growth. And I think the slower growth is a problem because if they're growing at 18%, I believe, they will not be able to meet a lot of the contractual obligations that they have. Now, OpenAI told investors revenue grew by 18% from the first to second quarter, while its losses deepened, results that disappointed some shareholders who hoped the startup would show more progress, catching up to rivals Anthropic. And we just had news that Anthropic did $65 billion of annual run ARR. So $65 billion. Okay, this is a huge difference. You can see over here, the company OpenAI said its revenue grew to $6.7 billion in the 3 months ended in June, up from $5.7 billion in the first quarter. If Anthropic is operating at a $65 billion ARR, they are generating $5 billion or more every single quarter. $5.1 billion every single quarter, which means, every single month, which means what Anthropic does in 1 month, OpenAI does in 1 quarter. So, like I was saying, I don't think if OpenAI, so-called quote unquote, fails, and how you define fail here really depends. Are they going to go bankrupt and fold up? I don't think so. But maybe they're not going to be the top dog when it comes to the LLMs. I mean, although granted, we do think that all of them will become commoditized, but still, I would say that maybe you might see that as a failure, right? So to me, if you ask me, I actually think that in this particular situation, the ones that are really going to be affected by this news are the companies that are downstream of upstream and downstream actually of OpenAI, because they have gone and signed so many contractual agreements. If you remember that circular financing thing that we were talking about yesterday, the three and this is $3 trillion in debt off balance sheet. I believe yes, this is the article over here. How much of this is actually partnership with OpenAI? You see, I just realized even Oracle is not even on this list. Right? You have Meta, you have Microsoft, you have Amazon, Alphabet. You don't even have Oracle, who is stands to lose the most if OpenAI is not able to fulfill their contractual obligation. I do not buy the argument that just because the remaining 49% of their RPOs is still healthy, that means that OpenAI, that means that they will continue to do well. I think there are 2 flaws with that logic. Number one, you are assuming that if OpenAI is not able to meet their contractual obligations, the rest of the AI companies will be able to meet their contractual obligations. My point is if OpenAI is not able to meet their contractual obligations, that likely means that there is a slowdown in the entire AI sector, and that means that companies that form up the other parts of the 49% of Oracle's RPOs could be affected. So that's why if you take a look at the way I structure my portfolio, am I totally adverse to that? No, I still buy companies like CoreWeave. But when it comes to the hyperscalers, my favorite has always been NVIDIA and Google and Amazon. That's the 3 that I really, really like. NVIDIA, not really a hyperscaler, but Google, Amazon, hyperscalers, and then NVIDIA 3rd place. I'd rather buy, like, if the entire AI trade fizzles out, the last one standing will be NVIDIA. Right? Not saying that they will not be affected. The last one standing will be NVIDIA. NVIDIA will still exist. They will just have to tie it through the cycle. But with that being said, my concern, number one, is that yes, if OpenAI is not able to meet these revenue obligations, likely there are other companies within the 49% contracted revenue with Oracle, and these other companies, the other hyperscalers, that will not be able to meet the revenue obligations. I don't expect OpenAI to be the only company to miss revenue expectations and profitability, and because of that, default on certain contractual obligations. So that will eventually hit the growth rate. And then, when the growth rate gets hit, when forward assumptions get hit, companies get repriced in order to, in a sense, go back to being free cash flow positive to really satisfy investors. They will end up having to pull back on capex spend. They will end up having to perhaps fire people. All of these things, unfortunately, including the firing of people, will drive up their profitability. And once again, the hyperscalers are best placed to recover whatever happens in the market, which is why I am not buying Meta. I think they are undervalued right now, but in this, like I said, I think I've said this a couple of times before. Like I'm not somebody who uses Meta products very often. I don't even use Instagram. I use Facebook. I use it for a very business kind of framework. Like I'm looking to run Facebook ads. I post on Instagram for the more Singaporean audience. But apart from that, I don't really use it for leisure. I use WhatsApp. But WhatsApp, I just learned, is usually big in Asian countries, not so in the US. So I don't know. I like Meta. I understand the thesis around it. It's just not a company that I use as often. Like with Amazon, at least I watch Amazon Prime. I use Twitch. I may not use Amazon, the product itself, because of Shopee. But there are stuff that I end up having to get on Amazon because I can't find the product on Shopee. So things like that do happen. But basically, my point is that I do see myself using Amazon a little bit more than I do. Okay, you know what? Just as I said that, I realized, okay, the only thing I use Facebook for is those Facebook marketplace groups to look for Pokemon cards. But honestly, apart from that, never ever use Facebook. So yeah, that's what I have to say about that. My worry, obviously, is that this is something that is a bit of a canary in a coal mine for the rest of the AI sector. Is this the first domino to fall? Now, obviously, this report came out, yesterday? Yesterday, right? Although this report came out yesterday, they were reporting on Q2 numbers. You have to bear in mind, right? Don't just look at the report and just get freaked out. They're reporting on Q2 numbers. And in Q2, of course, we know in Q1, Q2 of this year, Anthropic did very well. It's like OpenAI kind of lost a little bit of market share. But as I accidentally shared earlier, you saw this news article on CNBC on 29th of July that OpenAI CFO Sarah Fryer tells employees that annualized revenue in July topped all of Q2. Let's see. Okay, if you read this, the way, we need to get a little bit of confirmation about this. Annualized recurring revenue, their ARR in July, was higher than the entire second quarter as a whole. If that is true, and they did $6.7 billion in Q2? Is it 6.7? $6.7 billion in Q2. They're at the very least doing 6.8, 6.9, maybe $7 billion. If they're doing $7 billion, they are closer to $84 billion of ARR for the whole year. Does that mean that they have overtook Anthropic? I don't think so, because I believe the $65 billion number for Anthropic is also a little bit underreported. If you listen to the guys from All In, I believe they're talking about Anthropic's ARR being closer to $100 billion run rate, but they have definitely closed that gap. So yes, while I am worried about Q2's growth, and I'm not sure whether just 1 month in the quarter actually forms a trend, I think we really have to wait and see. I think we are waiting for the S1s, for some of these companies to come out to really have a better idea. What we'll be looking for is how much cash that they actually have, potential for future dilutions, whether or not they actually are being able to operate in a very efficient manner. Hi, Kunal. Good to have you here. And I think that's all the things that we are looking for. Yes, and so to me, I am a little bit worried about this, but again, not too bad. Really not too bad. Now, when it comes to CoreWeave, how CoreWeave is affected by this, if you guys do not know, CoreWeave also have a contract with OpenAI. Let me just double confirm how big this contract is with OpenAI. Let's see. Do we have? Where's the okay? Wait, CoreWeave OpenAI. Okay, I think it's over here. So CoreWeave announced an expanded agreement with OpenAI. This was last year, end of last year, around September. In March, it was $11.9 billion, then basically added to $4 billion in May. And then basically that brings the total contract with OpenAI up to, oh, wow. I didn't notice BMN of $19. That's fantastic. That is fantastic. I mean, we have been saying, I think 20s on this platform, on BMNR, is actually really doable. I think if you ask me fair value for BitMine right now, I would tell you perhaps closer to $21, right? I think that's fair value, just slightly above a 1 times MNAV. But again, what I think is fair value means nothing as long as the market doesn't think it's worth that, right? Okay, where am I? Okay, so why am I bringing this up? Because like I said, if OpenAI is not able to make good on some of their contracts, it's really a roll of the dice which contracts they are going to default first. Now, again, I just want to be very clear. Although I am bullish CoreWeave in the short to medium term, I do think they are one of the neoclouds that will be left standing. I don't think all the neoclouds will be left standing. I really think it is a winner takes most space because what they are offering right now can be commoditized with time. They are valuable right now because the hyperscalers do not have the time. They are basically selling you time, in my opinion. Because rather than wait for years for the structure to be built, for the data center to be filled up and powered and joined together, the hyperscalers need compute now. And that's what CoreWeave is doing. And they're doing it at a faster pace than the industry average. Now, why am I bringing all of this up? Because if you tie everything together, what you actually have right now is OpenAI generating around 18% quarter-over-quarter growth, much slower than expected. Yes, there has been an inflection in July, but it is what it is at the moment. Just 1 month of inflection. We are not sure in August and September whether or not this will actually continue. So we have to wait to the end of the quarter. Now, the danger over here is that if the revenue slows down and it continues to grow at this pace, let me just take a look. 18. Okay, if OpenAI's revenue just grows at 18% per quarter, that's actually a 93% year-over-year growth. 93% sounds like very good growth, and it is very strong growth numbers. But for the hundreds of billions of dollars that they actually plan to reinvest back into the business or to reinvest into or to fulfill these contractual demands, they have to grow more than 93%. Even Nvidia, who is doing billions of dollars of tens of billions of dollars of revenue, is expected to grow 93%. So they cannot just grow at 93%. They have to grow faster than that. That is the problem we are having with OpenAI right now. If they are unable to fulfill some of their contractual demands, companies that have larger backlogs with them are likely going to be hurt. You could argue that they will cut off all the smaller deals. So perhaps some of the companies where their contractual agreements with OpenAI is not so much, they could be cut off. Actually, maybe you know what? I should list out all of OpenAI's contractual agreements. Let me ask Claude. OpenAI contractual agreements from highest to lowest. Okay, let's see whether Claude actually pulls it up for me. But basically, if you consider that they might stop paying, the CoreWeave bulls will always tell you, it's fine. You know what? We have this kind of agreement that even if you don't use our data center, you will still have to pay. That is fine. That is presuming they actually have the money. They just choose not to use your data center. They will still have to pay you. Now the question is not about whether or not they will pay you. Now the question is they don't even have the money needed to fulfill the contract. So yes, you can try and enforce the contract and force them to pay you. But if they have no money, it just means they have no money. And that is the real risk, right? People think that, oh, because we have this agreement, CoreWeave, companies like that, completely safe. My take on that is that this is completely untrue. It protects the company in the so-called bullish scenario or base case scenario where they do have the revenues, but they might not have the need for compute. Right? So we are just slightly overbuilt. If we're slightly overbuilt, these companies have the cash flow, they can still make good. But if we are so significantly overbuilt, if the growth rate in the AI space is not fast enough, they don't even have the money to pay you. You can enforce the agreement all you want. OpenAI is just not going to have the money. Now, the good thing for CoreWeave is the way that some of this debt is being structured. I believe they are only being lent the money at certain points of the project. So they're not being given the entirety of the capital straight away. If certain things don't happen, they get that part of the loan. And I think this protects CoreWeave itself. Their adjusted average cost of capital has been coming down from 15% to 9%. So that's why when you look at these companies, I think it's important to look at it through both lenses. Like for me, I am bullish on some of these companies. Like for CoreWeave, I understand the adjustment of cost of debt. I can see at least in a short to medium term, there is a little bit of undervaluation here compared to the neoclouds. But I'm also aware that this is one eventuality that could play out. And I am not pulling wool over my eyes and say that, you know what, CoreWeave is well protected. CoreWeave is not well protected. What it means is that they are going to lose around $22 billion of RPOs if OpenAI chooses to default on their contractual agreements. And there's nothing they can do about it. The good news is that maybe they would not have taken out the loan in order to build out the entire facility yet. Right, so their loan agreements would also protect them and the bondholders. Okay, so wow, ranked by headline commitment value, you're gonna see this. I just asked Claude, OpenAI contractual agreements from highest to lowest. You have Broadcom at $350 billion estimated. That is 10 gigawatts of custom OpenAI design accelerators. Yeah. Okay, this is estimate, right? It's industry back solve at roughly $35 billion per gigawatt. It depends. I mean, if you're looking at Jensen's estimate, you're looking at $50 billion per gigawatt. So it really depends. Okay. Let's just assume 35, so $350 billion. But you can see over here, the next biggest risk comes to Oracle, $300 billion. And this is what I mean. I believe Oracle's backlog, Oracle's RPO. Oh, Nebius is 226. Wow, that's insane. Nebius. Okay, we'll jump into the charts later on. We've been yapping for about an hour. I'll jump into the charts in a little bit. Okay, give me a second. Where are we? Okay, let's go back. Then you have Microsoft at $250 billion, Amazon at $138 billion, Nvidia $100 billion, AMD $90 billion, CoreWeave $22 billion, Cerebius around $20 billion or so. So you can see the risk that CoreWeave holds, it's not as much compared to someone like Oracle. That's why you're getting 16% on Oracle. Of course, yes, I think Microsoft could absorb that. Do they not have anything with Nebius? What about? You know, Nebius is like that wound that you never want to open. So I never really go and pay attention because I missed it at 70 and it ran all the way to $200. So it hurts. So I barely look at it now. But let me take a look. Oh, okay. Apparently there isn't one. You can fact check that, but apparently there isn't one. Okay, I think we'll have to fact check this. I'm not very sure, honestly. I don't follow every single deal as closely. I follow the deals that CoreWeave signs, but not so much Nebius, right? Because I'm in CoreWeave, not Nebius. So you can see over here, the big difference is this. If I take you to the RPO numbers, let's just take a look at the RPOs. If you are in CoreWeave and let's say OpenAI decides to default on their commitment over here, you're talking about 103, then going to $104 billion plus another $25 billion. So you're talking about $130 billion. So if you take $22 billion, which is the deal, divide by 130, you are looking at around a 16 to 17% hit in RPOs. And we already know that 52% of their RPOs is likely to come within the next 24 months. Or not 52, 40%, which is around 50 over million. It's going to be realized across the next couple of months. So that is why for CoreWeave, the risk is still limited. It's 17%. Compare this to Oracle. If I take a look, if I bring you to Oracle, give me a minute. Oh wow, okay. I really want to take a look at the charts now. BMNR up 5%, SoFi up nearly 3.4%. Sorry, 3.4%. Wow. Okay. I really have to take a look at this later on. But let me just quickly give me a second. All right. Let's see. RPOs. They're at 638 billion. So nearly 50%, right? Nearly 50%, maybe 45-ish percent comes from OpenAI. So that means they're losing half of their future revenue if OpenAI defaults on their agreement. I don't think that's a good place to be. Because, like I said, if OpenAI defaults, I'm presuming other companies will also default. I haven't really looked into Cerebrus ever since they IPO'd, but I think now they are at a much more attractive price to start looking at them. Let me jump into the charts and then we will continue. This, I was asking it about Q earlier on, and I'll talk about this later, okay? But I like Q, but I think I have a lot of exposure to. But I'll talk about it later on. So Q is something that I may look into if I want to diversify away from CoreWeave. But I think the insider buying is actually pretty bullish. Let me see. Okay. All right, let's take a look. The account is back at $132,000. This is fine. We are seeing a strong bounce. That's what we want to see. Like I said, I'm not getting excited about the bounce over here because we still have to see them retest the $19 range. This has been solid resistance. Bitmine, this is a strong candle above the 100-day. You love to see it, which means $23 is definitely in play if we can close the day above. But I think the only thing that is left is actually the Fed meeting minutes. So let's see how that actually turns out for us. NVIDIA about to turn green on the day. Yes, I mean BMR on low volume, definitely, but we are only like an hour in to the trading day. So let's see how that ends up leveling out. But of course, yes, definitely going higher on low volume. You can see the volume over here on the minute chart starting to drop. So maybe we come down a little bit. But at least we are at 1950 today. And everybody can feel a little bit better. Anyway, regarding Q, what's your thesis around Q? Because they own the land, and is it because of that you think that to you that is the safest bet? They don't have that much risk compared to the other companies. And did I read somewhere that they have some sort of potential deal signed with Anthropic? BMNR on low volume. Yeah. I'm not too sure if your thesis is extremely long, but you can just give me the shortened form. Because, okay, the way I see it, Q is a good diversification and it's safe because they own the land. But my concern when I was looking into it compared to the rest, if I wanted a company that owns the land and is vertically integrated, you do have Iran as well. And I know you hold both Iran and Q, so I'm not too sure is this something you're looking at. You want the companies to own the land as well. Whereas CoreWeave is more full stack AI cloud management, and they will basically fit out the entire networking systems for you. But yes, I'm sorry to get you to type so long, but yeah, I didn't, because I was looking at UiPath and Dynatrace. I didn't get to look too much into Q, to be honest. Yet I've only managed to clod it just before I jumped on screen, which is why I already got the tab open. But when I looked at it after taking a look at the recent earnings, yeah, it looks very similar to Iran, just a couple of steps behind. Okay. Wow, markets are really, really excited. Okay, I don't think the markets are that excited. S&P, okay, Nasdaq is just up 0.1%. S&P is up 0.55%. Just the companies in the portfolio. They have substantial power, which I feel is a bottleneck. Okay. Yeah. I agree with power being the bottleneck. And if that is the case, yes, Q does. I mean, yeah. How many data centers do they own? Do they report that? Let me just take a look. I do have to wait. Let me pull up their presentation. I believe I have their presentation somewhere. I think it's here. Yes. Do you think Bitmine can? Okay, if Bitmine gets close to breaking $20, we will jump back to the charts. But for now, let us. Okay, you know what? Since you're here, let me just take a look at the Q presentation. Because I was building out the report for Dynatrace and UiPath. I didn't have time to do this, but let's take a look. And let me pull up the SEC filings. I don't like to just go by the. Okay. Let's take a look at Q. Q. We are a digital energy infrastructure company with own data centers and power assets. Yes. Okay, 2026 priorities: advanced permitting and commercialization, securing expansion capacity pipeline for 2028, growth for 2028 and beyond remains key priority. Bringing megawatts online as soon as possible. Right. So, do they have any sites coming online soon? if I'm going to dabble in the space, it is for a 10x possibility. It is in my small spec account. I mean, makes sense, right? Because they don't even have a single gigawatt of power. So my concern, if they do not have a single gigawatt of power, is that if we are worried that the AI or companies like OpenAI is not generating enough revenue in the first place, and the AI build out slows down, then not they like Q makes sense to me if we really are very certain that the AI build out will last as long as some people think it will last. If you have any sort of concern that the AI build out might or might not last as long or might be a little bit stretched out, which means that yes, still spend the same amount of money, but maybe within, in fact, initially they might plan to spend it within 3 years. Now companies might choose to spend that amount of money within, say, 5 years. I like the insider purchase. That is definitely true. But yes, my main concern when I looked at it, because like I said, I didn't really dive deep into this. I literally dumped the 10K and the recent presentation into Claude and basically asked Claude to compare it against my reports of CoreWeave, Iran, and Nebius, because I've already done reports for CoreWeave, Iran, and Nebius. And one of the things that it pulled out to me, which I was a little bit concerned, is this, right? This is the differentiation, and the contracted power for Q at the moment is nothing. And of course, if they do get contracted power, I think, like you said, 10x definitely possible. And power, as you have correctly identified, is a bottleneck. But with that being said, then this will be contrary to the thesis of the AI trade, right? Extending the build up or building up over a longer period of time. Moderating, that's the word I'm looking for, moderating the build up. If you believe that the build up moderates, then Q does not stand to benefit. Because a lot of these contractual obligations have already been signed with CoreWeave, with Nebius, with Iran. And if the capacities that they currently have with these neoclouds are already more, or they're already over capacity, then there is no reason for them to sign another deal with Q. So when I saw this, and thinking about the OpenAI discussion that we just had today, that was one of the concerns I had. But apart from that, to be honest, never really looked into it. I like the insider purchase. And I like that they're owning the land, because it gives them the flexibility, right? So they have Moses Lake, 18 megawatts of power. Okay, Sharon is 110 megawatts of power. Panther Creek, 350 megawatts of power. So that in total is what, 500 megawatts of power? Yeah. So I think generally what I see over here is a lot of if you believe in the power bottleneck and that it will be solved by let's put it this way. I think if you follow the AI trade, I think more or less we do understand that power is going to be a bottleneck. But if they do not have any contracted revenue right now, it's very hard to see that they might have some contracted revenue. They are basically grabbing all the leftovers and the scraps. Because I believe the big deals, a lot of the bigger deals have already started to be signed. And now you see the hyperscalers are already going into tapping the debt markets, and debt markets are already unhappy. So the debt markets might shut down the entire, quote unquote, shut down the entire AI trade. So yes, I think as what Lauren said, high risk, high reward over here. They are barely making $30 million. It's kind of my hedge against about being wrong about the AI trade. Yeah. No, I think it works. Definitely. Insider buying bullish. Just saying that, yeah. If the thesis that we're worried about doesn't need to fully play out, OpenAI doesn't even need to fail to fulfill on their contractual obligations, even if they fulfill 50% of their contractual obligation, which means that of the $22 billion with COVID, let's say they cancel only 11 billion. If we reach a situation like that, it means that we have overbuilt. And if we have overbuilt, unfortunately, companies like Q will stand to benefit the least, right? Because there's no need for some of their infrastructure already. So it's really, really all or nothing. And ladies and gentlemen, may I bring your attention? For the first time, you know what? I think I've been watching Amit streams too much over the last couple of years. Why do I feel like this is a bell moment? But anyway, $20 on BitMine, ladies and gentlemen. $20 on BitMine. We have been waiting for this for, oh my goodness, how long has this been since we hit $20? Back in May of 2026. So we have been waiting 3 months. For 3 months, we hit $20, came all the way down to $12.80, and we have recovered what? What's this? 8 divided by 12, 75%. Do we buy more BMNR? Well, I find it hard to say yes, honestly. I think this is extremely momentum driven. And you can see that, I mean, on a daily volume candle, it's still decent, right? I think we end the day with fairly decent volume. Let's take a look at what's happening. Okay, so that's what I was just saying. Bitcoin needs to break above 65,000. We are getting Bitcoin at 66,000. Fantastic. ETH back at $2,000, peaking above the 200-day moving average. Would you look at that? ETH peaking over the 200-day moving average. We haven't seen $2,000 on ETH since around the same time, right? May of 2026. It has been 3 painful months, and we are getting ETH at over $2,000. And because of that, BitMine at $20.10. We are up 10% on the day. Happy $20 days, ladies and gentlemen, especially if you are holding BitMine. Oh, yes, I saw. Peter Thiel's portfolio, 70% is in energy, 30% is in Amazon. Yeah. And he has VST as well, right? Vistra Energy. Are they the same? Vistra, VST, and VIST. Are they the same? One is Vistra Corp Corporation. That's VST. And then he also has VIST, because I believe he has both. Vista Energy. That's the ADE. $70 per share. But yes, I did see that. I'm selling puts on Q. Let's take a look at puts on Q. Oh, sorry. I realized I've been working on because Weibo is at the background. Okay, sorry. Q. Let's take a look at Q. And they're such a tiny company, $2 billion in market cap. Can you imagine if they reach even if they reach Iran size, that's like what, the 7x? Q Infrastructure, $3.02. If you're going out 44 days and you are selling puts at 0.3 delta, you're getting 31 cents. That's like 10% yield. But that's if you think you're going to buy Q at $3. If you are looking to buy Q closer to maybe $2, the last is 10 cents, 13 cents. 13 cents is still not too bad, right? That's like 5%. This just seems like a very typical Lawrence stock. Juicy premiums. Wow, would you look at that? ServiceNow up 6%. Okay, so the portfolio is recovering. CoreWeave is at 92. We are getting a little bit of a bounce over here. The AI trade is not dead yet. Volatility, I think it will still come. It doesn't look like it is today, but I still think I'm not celebrating too early. If listen to me, and I'm saying this on stream, if I forget this, if ASTS can bounce back here, $71, $72, just tap the resistance one more time for me so that I can exit my position. That would be bloody fantastic. Okay, CoreWeave about to turn green. We're just down 0.7%. Nvidia just down 0.2%. What a day. What a turnaround. I mean, in the morning, we were worried that this is going to turn red. But SoFi up 5%, BitMine up 9% on the day. The account is at $133,000. So you can see over here the positions. VIST, Argentinian energy company, recently bought a house there, met with the Prime Minister, bought the stock. Fair enough. I don't know anything about VIST. I just know that 70% of his portfolio is in energy, and he has Vistra Energy, Vistra Corp, right? And Vistra Corp, I believe, is on our list. Is it on our list? I think it's on our list. Somewhere. Yes, over here, Vistra Energy. Viper, doing well. Meeting a little bit of resistance on the 100-day. That's fine. Fluence. Okay. Fluence is one of those where now at these prices, now I'm interested. Like when it was over here, 17, 18, not as interested. Now at $11, I'm interested. Yes, BMNR can sell at the money again. In fact, from $18.70 onwards, they can sell at the money. And I hope they they issue as much shares as they need. They have bought back what? 20 million shares? Near 20 million shares in the last 1 month, in the last 4 weeks. Go out there and dilute 20, 30 million shares if you need to. $100 million. And then that should see them through to the end of the crypto winter. Yes, but you know what? I have nobody to talk. Okay, no. I correct myself. There's also another Singaporean that posts on X, Orange Grove Capital. He writes nice. He writes pretty good reports. He did DM me recently about Fluence. And I'm very guilty of this. I know you guys always ask me about different companies, but there's always so many things going around, preparing the stream, doing different research. Yeah, that I don't always get to take a look at everything, so I apologize if that is the case. Wow. This is insane. I mean, for those who have held through $12, congratulations. I mean, look at that. That is just a beautiful chart. Came back down a little, and then now, yeah. What a nice way to come to what a nice way to celebrate the middle of the week. Okay, I tell you, I'm really going to have a problem with Zeta. I think my break even now is like 29, I believe. I sold off like, okay, I mean, I can still buy it back now. I sold off a couple of shares of BMNR to fund some of my renovation stuff that I had to pay for, but then I got new capital in. I wanted to buy BMNR. Instead of buying it at 17, 18, I decided to be a smart ass. Like at $17.10, I sold a put at $17. Like you would think it would get assigned, but nope, it never touched $17. And now we're at 2028. So I guess you can thank me for the rally, technically. Because my money didn't come in from work, didn't come in time. I needed to raise some capital for some renovations. So I thought, you know what, just a couple of days, I will sell the shares and then I will put the capital back and buy back the shares right around the same price that I sold it. I decided to be greedy, so cash account puts instead. So now I'm sitting on like $50,000-$60,000 in the account. And yeah. But you know what? I already know myself. The moment the cash account puts expired, I'm just going to buy back Bitmine eventually. I'm not going to buy on days like today. I don't think. I'm not bearish, by the way. I don't think we go in a straight line up. That's all. But I nearly said Will Ferrell, not Will Ferrell, Sean Ferrell. My goodness, two different persons. Sean Ferrell, Fundstrat just told us yesterday, 30% move expected, right? So 30% move for Bitcoin could mean around the same kind of move for Ethereum. And if that is the case, wow, look at that. That is just straight up. If that is the case, you are basically looking at, okay, you are basically looking at ETH trying to test the 2400 range. Okay, so ETH is at 2012. Bitcoin 66,000. Can we get to 67,000? Would that be asking a little bit too much? Let me go back to the dailies. If you go back to the dailies, yeah, okay. We want a break and hold above this area, right? Okay, whoops, my line is not straight. Get my line straight, pull it up. We kind of like want a break and hold above this area. So a break above the 100-day is definitely bullish, but we have been, this line has been support for quite a while, early this year. And then now it has been acting as a little bit of resistance. The short-term momentum is inflecting upwards. That is definitely a positive. Yep, 10-year is still not down by too much. Let me take a look at what's my Bitmine. Yeah, I mean, I personally, I mean, I already know myself. Like, I think 4 years, 5 years ago, I would have hesitated, but I already know, even if it's at 2021, I'm going to dollar cost because my unadjusted cost basis is still 35. It's just that my adjusted cost basis is around $29, $28. But honestly, when I sold the cash secured put at $17, when BMNR was trading at $17.10, 20 cents that day, I already knew that this was a possibility, and I rationalized with myself that if this actually happened, that Bitmine went from $17 to $20, and I missed out that $3, okay, then that is perhaps $3 times the 2,000 shares that I sold to raise some cash for renovations. That's only $6,000 difference. So it's not that bad, right? It's not that bad. I still have the majority of my position, and I still got pretty juicy premiums. But it's just annoying that I sold the shares. I sold the shares wanted to buy back, decided to be greedy. And then the one time, the one time I decided to be greedy on this, it just ran. Every time I'm like conservative, let's wait a little bit to sell the put and all that, waiting for the right time. No, the moment I go aggressive on the sold put, it rockets. So, I mean, maybe I should like sell a put at $20 and then we'll get to 25. But anyway, if you take a look at the portfolio tracker, to be very honest, of course, don't chase. I'm just talking nonsense. Don't listen to me. But yeah. No, I think I will get a chance to buy back with a one handle at the front. As long as I can buy back with a one handle in the front, I'm happy. Yeah, I think it's just one day. So I'm just rolling. But anyway, so you can see over here. We have okay, our cash put today is 12 cents. So we can technically close this. And I do have the covered call. Covered call, of course, under pressure. But we still have up to $23. That's another 15% to go from here. I think we do have resistance overhead. I don't think we get to $23 by 18th of September. I could be wrong, but let's see. Again, my take is that if we actually ran from 17 to 23, that's $6 spread times the 3,000 shares I have now. Okay, my account will be up by another $18,000. So would I mind my account being up by another $18,000? No, I wouldn't, right? So I am honestly not too bothered by it. Do I want to own more Bitmine? I do, definitely. Now that I have the capital, I do. But again, similar to the main portfolio, I'm just not in a hurry to deploy capital right now. I think capital is the best hedge against the market. So right now I'm in usually I'm like 3 to 5% cash. Right now I'm closer to around 10-ish, 50,000. It's like what? Yeah, 10-ish% cash. So you can see over here, realized premiums so far since 27th of August last year, we realized around $22,000 in premium, and basically the cost basis is $29.20. So this is really a slog all throughout the last couple of months, right? So you don't necessarily have to have the cleanest cost basis. Like I said, I think for many of us, when it went up to 60, fell 50%, a lot of us thought, you know what? It has already fallen 50%, more than 50% at the point in time from the highs. Might be safe to start a little bit of a DCA. And then it continued to fall another 50% there. So who could have known that? Nobody. And I think that's why I really like options selling as a strategy, because it allows you to adjust and correct your cost basis. Like rather than, have $100,000 sitting around in Bitmine doing nothing for the last, 1 year, August, oh my goodness, 27th August, basically $100,000 Bitmine position made me around $22,000 in premiums. So that's why this is important. So right now, what you're seeing over here, both, even though the stock price has gone up significantly, I believe, what's the price now? The sold put 55 cents. Let's see, we are at sold put. Where's my puts? Okay, my BMNR puts are 99 cents. Okay, so this is a good teaching point, again, for those of you who are interested in doing options. If you take a look at the number over here, now I sold the put for 50 cents, right? Now, then the put today is worth double of that, 99 cents. But if you take a look at the numbers over here, the extrinsic value of the put is still 100% and the intrinsic value is still 0. Why? Because the price of the Bitmine shares is still below $23. Means there's no intrinsic value. Intrinsic value means the profits that the easy way that I defined it, intrinsic value means that the profits you would receive today if you were to exercise the option. Now, if someone were to exercise the option today and buy my BitMine shares for $23, they would not be in profit, right? So that's why there is no extrinsic value. In fact, they lose $2.69. Doesn't make sense for them. So right now, yes, although it seems like a huge increase, we are technically, quote unquote, down 100% on this, because if we buy this back, we paid what, $1,000? We got paid $1,005, but if we were to buy this back, we would have to pay $3,000. So quote unquote, we are down, quote unquote, down 100%. But number one, you don't have to buy back. You can just let it ride. Number two, all of this is at extrinsic value. What is extrinsic value? Very simple. It is called hope. Extrinsic value is basically hope. People are paying for hope. What is the hope? The hope is we will get above $23 by 18th of September. And so people are paying for hope today. Right? Because why are they willing to pay for hope today? Well, because BitMine is up 11%. BitMine is $20.30. And of course, given where we are today, 19th of August, with BitMine at $20.30, there is a lot of hope that BitMine can get to $23 by 18th of September. Compare this to yesterday when BitMine was at $18. There's lesser hope that BitMine will get to $23, so the hope costs less. It's simple as that. Okay, so again, like I said, let's see how this plays out, because yes, it is a huge run today. You can really see the response to Treasury buying the long bond today. Any heavily indebted company is moving high. Yeah, definitely. I think the yield is going to be the prevailing story for the next couple of weeks, and I think Jackson Hole next week will be a little bit of eye opener. Not eye opener. Will be a little bit of a test for the markets. I think it's going to be a little bit volatile until then, while we are 12% up on the day. We are 12% up on the day in BitMine. So I do think that at the end of the day, this is a treasury story right now, or at least this season of the market. We are looking at the bond yields, and if the bond yields remain high, then we are going to we're going to get a little bit of volatility, right? For those of you who are not sure what Lawrence was just talking about, he's talking about this news that came out earlier. Let me just share my screen. Bitcoin 69,000. You know what? All my fixed income folks are going to be happy. That's what I'm going to say. All my fixed income folks are going to be happy. Net chart just over $2 per pro. Net. Okay, what's net? What is net chart? NAT. Nordic American Tankers. Wow, okay. Hi, good evening, Chris. Nice to see you here. Best channel on YouTube right here. Thank you. Thank you for all your support. I have a good mind to call this entire segment. Like, everybody takes market open, so you can't differentiate, right? There's so many market open every single day. I think I'm going to call this segment the night shift from now on. It's like I'm in Singapore. It's night for me. I think it makes sense. It's like I'm working night shift every single night. Yeah, maybe I should make a proper thumbnail and everything over the weekend. You see, my intrusive thoughts. I should be focusing on research, but I'm thinking about thumbnail ideas. Treasury doubles debt buybacks as percent move to steady bond markets. We will take a look at the Nordic American Tankers in a little bit. I have no idea what they do. Let's see. Treasury Department on Wednesday said it will at least double the level of government debt buybacks in the next few months, targeting the sensitive, longer duration segment of the market. Yields tumbled following the announcement, and stock. Oh my goodness! Sorry, I just kicked something. Stock market futures surged. All right. So Treasury Department more than double the size. Fixed income markets under pressure. Yields surging to levels not seen in nearly 20. I think it's not 20 years, right? It's like in 30 years. In 30 years. From what I remember, was 30 years anyway. Under the accelerated buyback, Treasury led by Secretary Scott Bessent will target the 10 to 20 year, 20 to 30 year. The 30 year is what 5.3%? That's insane. The last time it was so high was back in 07. 07. I was 17 years old. I still didn't even know how the world works. I was completely oblivious to the great financial crisis, I would say. 17 years old, I just graduated secondary school or middle school. So I had no idea how the world works. I knew it was the great financial crisis, but it seemed to me like life went on as per usual. But I think looking back on hindsight, it's because I was in a very fortunate position. My mom works in a government job, so our pay and everything was stable. So I didn't really feel it. So I didn't understand how it affected the economy and things like that until much later. You created benchmark fell 10 basis points. You know what? To be fair, yes, it did fall, but still it is elevated and it's still in an uptrend. So I wouldn't be putting too much. I mean, of course, this is going to extend. There's going to be a lot of buying pressure. That's good, right? Okay, let's take a look at Nordic American tankers. Lawrence always brings very cool names to the channel. I've never heard of Nordic American tankers. Nordic American. When I was a kid, mortgage rates were over 15%. You know what? I think in Singapore, because Singapore's interest rate has generally been quite low, we finance our houses at around 2.6%. And people are already feeling that that's a pretty high rate to pay, until I met friends from America who tells me that no, 3 to 4% debt is pretty cheap. So that's when I realized that the kind of financing rates differs for people in different countries. Because my friend just refinanced their property at 1.5% earlier this year. 1.5%. And right now, because the place that we got is public housing, we took a loan from the government. Even then, although it is higher, it's still 2.6%. So when I hear that the US is the housing markets in the US, you are refinancing at 3-4%, wow, that's a little bit of a shock to me. That's like double of what I'm paying. And if I get a bank to refinance it next year or 2 years time, then I will likely be paying also around 1%. Because I do believe that interest rates come back down again. It's a tanker company, Nordic American Tankers. Wow, $7. Oh. Well, if you bought this company in April of 2025, it would have been a 7x from there. Wow. You see who needs AI when you have Nordic American Tankers? $1 billion market cap, 200 shares outstanding, PE ratio 27, price to book 3.2. Well, that's forward PE. Wow, so they're expecting nearly a. My math is not mathing. They're expecting a double in earnings in the next year, right? Forward PE of 12 times. That's cheap. But I have no idea what they do. Tank. So, see, that's where Claude comes in. What does Nordic And you were saying something about the options chain, Lawrence. Let me see. Look at the net in just $2 premiums are poor, but maybe buy a put here to protect. Okay. What price do you get into Nordic American tankers? I mean, is the IV is pretty low here, right? The IV is pretty low here. The IV rank is 22 on my chart. And IV percentile, you're middle. Okay, you're not low, you're in around average, I would say. If I go back, what are you looking at? Like $6? If it falls, you're looking at this range. 1, 2, you have 3. Kind of a little bit. I wouldn't really call this a bounce. You're looking at really 1 times 2, 3, 4. So you're looking at $6. Tons of insider buying. Yeah, I mean there were periods like you see over here. This is what between Feb 2026 to June of 2026. So basically, the last 4 months, they were flat between $5 to $6, and then suddenly they had this pump up. So, I would say if you want protection, you should be looking at around $6. In terms of options, yeah, I mean, how's the covered call? Covered call is not fantastic. Covered calls are not fantastic. I mean, I guess if you really want, you can sell $7 covered calls. That would take you to $7.35, $7.40. If you're okay to like if this is a trade and you're just like okay to exit the position, $7 covered calls at 40 cents, you are giving yourself an additional 35 cents upside. So that's like another 5%. Premium is terrible, 220, right? Because, yeah. Oops, I just lost it. 220, 220. Oh, if you're buying a put, is that what you're saying? At $9? Buy some put offset with selling calls to protect BMNR against the Clarity Act. When are we expecting the Clarity Act? Middle of September, am I right? I think we're expecting the Clarity Act in the middle of September. That is 1 month out. I would let it come closer and see how the stock reacts. I think if we run past $23, then that's when I'll start looking at it. But like in Lauren's case over here, I think the premium is at $2. Yeah, $6 is really about there, because if you look at this line, this is really at $6, right? So if you're buying protection, $6 makes sense. Because this is the line over here. Wow. So really today the portfolio is green, but it's because of the names that we have in the portfolio, because the Qs are about to flip red again. And that could take the names in the portfolio down. Unless your name is BMNR. Today nothing is taking you down. Famous last words. Hopefully not. Portfolio started, in pre-markets, this number over here was $128,000. I am still so annoyed. Okay, CoreWeave is green, but I am really still so annoyed. Oh my goodness, at ASTS. I saw it. I closed the cash account put for nearly a 90% profit, and then I just left it at market order. Oh, annoyed at myself. Like this is like the most obvious. You have the point. What's this? Yeah, you have the 0.236 over here, and then you had the 50-day. Oh my goodness. Oh, the more I look at this chart, the more I'm irritated. Okay, no talking about ASTS today. Yeah. So I mean, you can see most of the semiconductor names, I think they were taken down by Nebius earlier on in the day from the convertible notes, but the rest of them seems to be recovering. How is Nebius doing? Oh dear Nebius. I will look at you today because you are down. Market's parabolic, even though we have Fed minutes in a couple of hours. I think we kind of know what we are expecting to get from the Federal Reserve. I don't think we see anything too bearish, I would think. Okay, Nebius recovering slightly from the lows of 215, making a good bounce off the D-Day over here. Yeah, I'll take a look at the Fed minutes tomorrow. Yeah. I have a meeting in the afternoon tomorrow, but that's about it. So I will be able to take a look at that. Oracle is such an ugly chart. Like, I know there are creators, some of the content creators out there, they are pretty bullish on Oracle. I am a little bit more skeptical purely because of how much of their RPO is tied to OpenAI. Like, I have confidence in the AI trade. I have not as much confidence in just OpenAI by itself. Yeah, I mean, you're up. If you really want to protect, if you don't mind getting the position called away, you can sell the $7 covered call. Use that to buy the $6 puts. Because you still get 5% over the next 1 month, which is pretty decent. That's only if you don't mind the position running away from you. Because if you have made a 3x and this is just a trade for you, you might be okay to exit at 740. I believe earlier on I was looking at the covered calls. You're getting either 35 cents or 40 cents for the next 30 days. So it really depends. Yeah, but anyway, back to this. I cannot wrap my head around Oracle, really. Yeah, I really can't wrap my head around Oracle because they are a $400 billion company. Yes, they are expecting over $600 billion in backlog. But right now, they are doing what? Less than $80 billion. So even if you make the same assumption as CoreWeave, that around 40% of this gets realized in the next 2 years, 40%, you're looking at $200 billion, $240 billion. So so basically between 27 and 28, we'll see whether or not OpenAI can actually live up to really live up to their contractual obligations. Because I don't think that I really do not think that there is a non-zero chance that OpenAI fails to actually, fulfill the end of the contractual obligation, and Oracle is the most exposed. And the most exposed, never mind. The core business of Oracle is not as strong as, like, if OpenAI defaults on the Microsoft deal, Microsoft still have Office. They still have Copilot. They are able to have a very strong underlying business. Oracle's underlying business, not my favorite, I would say. Generally, we are seeing the markets rally a little bit into the, oh wow, are we getting $21 on BMNR today? I feel like I need to go to the gym soon, but I feel like we might be getting $21. We are at 2085. Give me a minute. Where is... My covered calls are 140% underwater, but I couldn't care less because Bitmine is at $21. Going to be, oh no. Are we getting to 21? Are we not? Okay, you know what? At 12, I really need to go to the gym. I'm trying to get my sleep cycle correct. But let's wait for the last 15 minutes. Okay, I'm going to leave this here and I'm going to look at this chart. Do we get to, where's the... Tenable. I think you have 22,000 shares at $21. Can we get that? Maybe. You know what? All these people are helping Bitmine raise capital. Go ahead, keep buying. I'm not buying today, but the rest of you keep buying so that Bitmine can raise more capital. Thank you very much. Yes, I am based in Singapore. I am. Would I consider January 27 $3 calls on Q or just on the stock? If I am a betting man, I would say I would take the call because I do think we see a bit of an end of year rally. But I would not be buying the call today. That's what I would say. Okay, let me test this out. If you guys spot any mistake, do let me know. I'm testing out. I've coded. This is written. I basically gave it my old SoFi report that I manually handwritten, not handwritten, like typed out. And then I gave it UiPath's 10Qs, the last 8 quarters, plus the 10Ks. And then I downloaded all of the transcripts from their earnings call and from all the different tech conferences that they go to in the last 2 years. And basically told Claude to, or created this agent to come up with an equity report. Let's see how good it actually does. I'm just testing this out because if this works, it saves me a lot of time. UiPath sells one platform that does 3 jobs. Deterministic automation, software robots that follow. Okay, we know this. 12, you know what? It's not just me. Because Singaporeans in general, I don't know, they have something to do with working late. I can go to the gym at 12 and there's still more than 10 people there. Like I went to the gym yesterday and I had to wait for the bench. We had 2, and both were occupied. It's not the biggest gym, but it's the one that's opposite the road. But yeah, I went at 12 yesterday and the bench was occupied. So software robots that follow the fixed script across enterprise applications, clicking through screens, calling APIs in exactly the same order every time. It's the proven money maker. I mean, okay, reading this, you can kind of see why UiPath has gotten sold off, right? Because right now, Claude can do something similar, like record yourself on the desktop. I haven't really tried it yet. And then Claude can actually keep up the pattern. I don't think we're getting $21 today. Market doesn't seem to let it get there. We are at 20.77. Yeah, I think Oracle is exposed to quite a bit of risk to OpenAI. It's too concentrated for my liking. Second job, agentic automation, AI agents that reason rather than follow a script, deciding what to do next on context. You have process orchestration. This is the layer. So basically, this part here sounds a little bit like what ServiceNow is trying to do. reads unstructured documents. Around those sits the supporting products: IXP, intelligent extraction processing, reads unstructured documents, invoices, purchase orders, renders them. Okay. Test cloud, process intelligence. I mean, this is really not bad, right? Because I would think that it broke it down this way, because when I gave it my SoFi model, I actually broke it down into lending, into financial services, and then into the tech platform. And then in lending, I was talking about personal loans, home loans, and student loans. And then for the financial services, I focus more on the loan platform business. Yeah, crypto, big business banking, things I added in recently. So I think it's trying to mimic that kind of format over here. No, it's not too bad. It is a little bit wordy, but I mean, it is it's supposed to be an equity report. The work is defined. Everyone agrees to it should be automated. Companies cannot build it fast enough. That's not the problem. The marketing, we want AI. The problem. Oh, you know what? I feel like this is true, because I am feeling this. Nearly every customer conversation surfaces the same constraint and automation backlog that outpaces their capacity to build and maintain. So every time I want to, basically, it's saying that every time you try and automate something, you are moving so fast in your business that it becomes this backlog that outpaces your capacity to actually build and to maintain it. I think I know why I keep touching. There's this mute button at the side of my mic. I just realized. Okay, every time I hold the mic this way, I touch it. So I think when it comes to software, UiPath is the same. You read this, and to the lay person, it sounds as if this is like it's a cloud can do the exact same thing. But what people fail to appreciate is that you're not talking about asking an AI to do some day-to-day task. Like for me, very simple. Very simple. I've already created the agent to create reports like this, to double check my work in my Excel file. Yep, you guys are saved. It's back. Audio is back. I keep touching this. I just realized I've got this mic for about a year, and I only just realized there's a mute button. How the heck did I? You see, now I'm pressing it and it can't mute. Okay, so it's been a year. I still haven't found out how to activate the mute button. I always accidentally activate it, but I guess we're safe for now. Where was I? Oh, okay. So the way that I understand this, or the reason why I'm a little bit more bullish on software than I still remember when you were using the fog. Yes. Oh, the fog is no longer here. You see, now I'm distracted. Okay, sorry. Backtrack. The reason why I'm still a bit more bullish on software than most people is because I feel like people are looking at it as just a task, right? And it's the same for and what's that Dunning-Kruger effect? When you don't know anything, you think everything is very easy. And so similarly, it just seems like, oh, it's just software, just automate the process. But it is not that easy, because there are certain nuances within the business, within the workflow, that perhaps only people who have worked on it can actually explain to you, and they need automations to work a certain way. You can't just get Claude in, teach Claude everything, and prompt it in the correct way so that it remembers how to automate the process. Good evening, good evening. Good evening, fellow Singaporean. So what I see over here, and you can see this last paragraph, the single most revealing number is this: expansion deals that included AI were 6 times larger than those that did not. And 16 of the top 20 deals in April 2026 included AI. So basically, they're trying to say that, look, this is not something that works apart from Claude, apart from AI. This works together. It is synergistic with AI. AI actually makes their process a lot faster, a lot more efficient, a lot better. The only thing that is not what I like about UiPath is here. The dollar-based gross retention of 97 to 98%. I prefer to invest in companies that are above 110%. I think 2 to 3% doesn't sound like it's a big deal, but if you scale that out over years, it does make a big difference. So I think for me, is UiPath going to be replaced by AI? I don't think so. For the very simple reason, a lot of these companies have their own proprietary workflows, have their own proprietary processes that you cannot just take Claude, put Claude in, and then get your admin assistant to automate her process by talking to Claude. You need an intermediary layer, and that is UiPath or ServiceNow, right? So that's what they do. You see, there's a telecommunications company with nearly 2,000 process automated. How anybody in the company, because like I said, you have to understand, maybe to us degenerates that are looking at the stock market every single day, AI is like a big deal. AI is like something that is going to take over the whole world. Like we kind of see that direction that the world is moving in. But for the everyday person on the street, AI is just a chatbot that has replaced Google search for them. That's basically all it is. And so if you're asking a layperson to automate a process, they don't even know how to use the chatbot properly, let alone prompt it properly. I mean, it took me a long while to learn how to prompt Claude in the correct way, to even create this agent to write all these things down. Because at the start, when I first started learning how to code, learning how to create my own agent, I said, write me a report. And the report was like crap. And then I realized, oh shit, you really need to put in a lot of work. And this structure that you're seeing, this report here, this is over 30 pages. And this structure over here is something that I have done previously. I have given Claude what I've done previously. And then section by section, I took the time to tweak how Claude actually generates that response. And so in a sense, that's what UiPath does. So you can't just say, take Claude, put it in, and then let it work. Yeah. Okay, let's take a look at current market size. So market layer, broad agentic AI spending, $200 billion. Enterprise application, $230 billion. So you are looking at around a $400 billion market. But again, this is total addressable market in this first column. This is serviceable addressable market. UiPath is not going to be able to address the entirety of this $200 billion, right? Okay. So these are the smaller markets that they're in and the projected CAGR. RPA software, IDP, workflow, agentic AI, standalone and embedded. Yeah, okay. I think they are, I think for a lot of these software companies like ServiceNow, Salesforce, even UiPath, the assumption that once you have AI, you do no longer need these software. Sorry, I think it's a little bit far fetched. People really discount the amount of work that goes into running every single part of the company. Okay, let's see. Let's talk about the moat. Where's the moat? Let's talk about the moat. Okay, so install base switching cost strong. I wouldn't call this strong. You see, okay, this is the perfect example of where AI fails. Like you can't just dump something into Claude and expect it to come out everything. You see, so if for example, this is a perfect example. If someone who doesn't really invest, who doesn't really look at companies, and looks at this, and Claude will tell him, oh, $98, 98% dollar-based retention, that is strong. But for me, my standard is I want to invest in companies that are at least 105 to 110% gross dollar retention. So I'm not sure whether I will consider this strong. Yeah, so I will be adding that to the AI memory. So you see, these are things that people assume that, oh, you know what, AI can replace the human being. It's not true. Because there are certain things, there are certain way you do things that the AI just doesn't know. They base on what they can find on the internet and basically some sort of industry average and things like that. But they don't really know your own style or of your own framework. And as much as you try and teach it, sometimes it just doesn't click, especially when you're trying to generate a 30-page article. Governance and auditability, named as designed for competitive wins, American Credit Union, European car manufacturer, improving each release, each certification, under direct attack from Microsoft Agent 365 and OpenAI. Yeah. So, like I said, it is competing because you have seen that some of the things they can do, these companies like OpenAI and all that can do as well. But of course, they will also, it's not as if the companies that they work with pay for a max plan on Claude or OpenAI and can just fire them, right? They need someone to be able to run it as well. So what they've done is that they've integrated OpenAI, integrated Anthropic into their platform, and they work with the companies there. Yep. So I'm still training this. That's why I'm testing it out now. It's not perfect because, yeah, I don't always, like, not every company has a net revenue or gross revenue retention, right? So, like, if you think about it, the companies that I trained it on, or okay, companies that I've written report for in the past, Nvidia, there's no net revenue retention over there. SoFi, no net revenue retention. So it's there's always new edge cases that you need to teach it. And I didn't write, and the reason why it probably doesn't know because I didn't write anything for Palantir. Palantir has net revenue retention. Oh, yes. You know what I did? I actually went back to my YouTube history. I saved all my transcripts and dumped it in and basically synthesized an entire reference folder for my voice. Yeah, it does. I do have a reference folder, all my transcripts. So, oh, sorry, I was reading this wrong. This is gross 97, 98. Net has fallen. Okay. Net has fallen from 121 to 107. Okay, so maybe it's not that dumb after all. I misread it. This was gross. I was reading it as net. Dollar-based net retention fell. Challenge. Okay, maybe it's not that dumb after all, but my point still stands, right? You need to be able to understand the processes to be able to spot the mistakes that the AI makes, and you need to not be doing it after streaming for 2.5 hours and then misreading the words. So, two things that you need to. Yep. So that is definitely one of the mode, because like it says over here, right? The install base and the switching cost is definitely strong. So it's not easy to switch. So yeah. But this net dollar retention, something we have to take a look, because it has fallen over 10 quarters. Like for Palantir, yes, it did fall for 2 to 3 quarters. If you remember the early days of Palantir, sub $20, it fell from, I believe, 130 all the way down to 105, 104. At one point, it was like 102 or 103, like barely over 100%. Right now, today, we are much higher. We need to see that inflection. But over 10 quarters, that's 2 years. I think it shows why the stock price has fallen by so much, right? The stock price really has fallen quite a bit. So I think it makes sense. But right now, we are seeing a little bit of an improvement. Like, to me, this was always a COVID stock. Like, I really heard about this company during COVID. And then, yeah. But I mean, today up 2%, it's decent. It's still a little bit on the oversold side, barely. Okay. Well, ASTS, hopefully I get my wish. Please just touch $71. I'm just looking at it, and then I will trim, because I want a little bit more cash in this portfolio. Okay, but with that, thank you very much for your time. We have been on for 2.5 hours. Thank you for over 20 people being here at one point in time. I will continue to improve the structure of the show, the way I present my stuff. I am just getting to grips with this, and we are going live every single day for at least 2 hours, right? So that's my promise to you from now to the end of the year. Let's see if that works, and then we will take that into 2027. I hope your stocks stay green. I hope Bitmine ends the day above $21, right? So if it does, and if you're watching to the end of the video, you can leave a comment, $21 down in the comments below, so I know that you have watched all the way to the end. And I'll see you tomorrow.